Hi everyone, Professor Christensen here. Today we're going to talk about what is accounting. So there's a bunch of videos here that will help students study their accounting, but maybe you're wondering, what is accounting? Maybe you have to take an accounting course and you're not sure what it's going to be all about. So this video is going to give us a brief introduction to accounting. All right, so this is what we're going to do. We're going to talk about what is accounting, about starting a business. We're going to take a look at how the business did, and then we're going to take a very brief look at accounting careers. What are some of the things that people do with an accounting degree? All right, so accounting uses numbers. Numbers like 562, 3,421,900, or 82,923, the salary that you hope you might earn when you graduate college. All right, it uses dollars. So you're using numbers, most of the numbers in the form of dollars. So you might think accounting is math, but no, accounting's not math. So even though they both use numbers, there's a common misconception that accounting is math. If you take accounting and you're not good at math, don't panic. You use very little math in accounting. In a beginning accounting class, you're going to add, subtract, multiply, divide, maybe a little bit of fractions and percentages, but it's very, very little math. So don't worry if you're not good at math. And if you are good at math and you're good with numbers, that might help you a little bit in accounting as you go on, if you're an accounting major. So accounting, we call it the language of business. And let's see what that's all about. So let's say you decide you're going to open a landscaping business, all right? And you're going to call it Greener Pastures. All right, so first thing you need to do is get some money. All right, so you go online, check your bank account, and you find that you can put $15,000 into your business, all right? So you're thinking, well, $15,000, probably not exactly enough to get a business started. Maybe I better get some friends and family. So you talk to some friends and family and they say, okay, we'll help you out, and they contribute another $20,000. So they are investing in your company. They're company investors, okay? All right, so what you're starting out with is $35,000. You as an investor contributed $15,000. Your friends and family contributed $20,000. So you have $35,000, and the $35,000 is what you own in the business, your equity. Yours and the owners, all of the owners are you and your friends and family. So that's what you're starting with, $35,000. All right, so now you need to get your business started, right? So you're going to have to go buy some stuff, right? So let's go. So we're going to buy a lawnmower. We're going to buy a leaf blower and a weed whacker. All right, so all of these things cost $25,000, and you decide, well, since you only have $35,000, you don't want to use all of your money to buy your equipment because that's not going to leave you with much. So you decide you'll put a down payment of $10,000, and then you borrow the rest from the bank. Okay, so that's called a note payable, because you sign a note promising the bank that you're going to pay it back, and you're going to have to pay interest on that borrowing, right? So for now, we're going to ignore the interest. In real life, of course, you would have to pay interest to the bank. All right, so now you have your equipment. All right, so you're going to spend some other money. You're going to do some advertising, right? Because you want to get some customers. You're going to have to pay some insurance, some liability insurance in case somebody gets hurt, and also insurance on your equipment. And then you're going to have to buy gas and oil for your equipment. Let's say we're talking about your first quarter. So we're looking at the first 3 months that you run your business. All right. Okay. So now we get some customers. Here are our happy customers. They're so happy because their lawns look like this now. All right. So let's say in the first quarter, you managed to drum up 15 customers, weekly customers. And every week they give you $50. So that means every week you earn $750 from your customers. And there are 13 weeks in the quarter, the first 3 months. And so you end up with revenue of $9,750. So the revenue is the money that your customers pay you. If you go into a store and you buy a sweater, the money that you hand the clerk is the revenue for that store. Okay, so now you have $9,750 in revenue, and you have these other things here, which we called expenses. All right. Okay, so we're done with the first quarter. We want to know how we did. How did we do? All right, let's check it out. So this is a summary of how we did in the first quarter. So we had revenues of $9,750. Remember, we calculated that right here, right? $9,750 in our revenue. And we have those three expenses, our advertising, our insurance, and our gas and oil. So we call this net income. All right, so the revenue is kind of like the gross amount. That's the total amount of money that came in, but that's not all yours, right? Because you had to pay the expenses. So we end up with $7,450 in net income. So this is one of the equations that we use in accounting. And it's revenues minus expenses gives you net income. All right, so this company had $7,450 in net income during this quarter. This is a statement. We call this a statement. And this statement is called an income statement. Sometimes it's called a profit and loss statement because it tells you whether you have a profit or a loss, or P&L. So if you hear someone say P&L, that's what this is, right? In this case, this company has a profit. All right, so that's how we did from an income perspective. Now, how much money do we have? Well, how much actual cash? We started out with $35,000, and then we put the down payment of $10,000 for the equipment. We paid our three expenses, and we end up with $32,450 in cash. So cash is not the only thing we have now, because remember, we bought some equipment. So at the end of the quarter, we're going to take a look and we're going to say, what do we own and what do we owe? Okay, what do we own now? All right, so we have cash of $32,450. Just figured that out here, right? Cash $32,450. We also have equipment that we just bought, right? The equipment cost us $25,000. And we add them up and we get our total assets of $57,450. Now, how much of that belongs to the owners, right? Of the $57,000, we owe $15,000 to the bank. So that's not really our money, right? That's the bank's money. So we call that a liability. So we have $57,450 in assets, and the bank owns $15,000 of those assets. So the owners, we call this equity, the owners own $42,450. This is no different than equity in your house. So if you had a house, say you bought a house for $300,000 and you put a $50,000 down payment. Well, your equity is $50,000 and the $250,000 is your mortgage. That's how much you owe the bank. So the bank owns $250,000 of your house and you own the $50,000, right? So that's what this is here. So the owners now own $42,450. How do we know that? Well, the owners started with $35,000. That's what they put in. The income belongs to the owners. So, right, any profit that comes into the business belongs to the owners. So you add the income to what we started with, and that gives us equity now of $42,450. Notice this little equation here at the top. Sometimes we call this the accounting equation. It's always true for every business at every moment in time. Assets equal liabilities plus equity. And you know, if you were more advanced and you started evaluating companies and you take a look at them, well, one of the things that's important to look at is how big are their liabilities compared to their equity? Does the company owe a lot of money? If so, they have to pay it back and they have to pay interest, right? So we might consider that a little bit risky if they have a lot of liabilities. Okay, so this is called a balance sheet. And the reason it's a balance sheet, it balances, right? The $57,450 here equals the $57,450 there. All right. Okay. So let's say you thought you might want to invest in Kohl's. So Kohl's has pretty simple financial statements. This is what they look like for previous 3 years. And you'll see that even if you look at other companies, and you can find financial statements for any company online. Remember, we had revenue in our little landscaping business. So Kohl's has revenue. When you buy something online from Kohl's, or you go into the store and you buy something, that gives them revenue. They have a bunch of expenses. And when you subtract all of their expenses from their revenue, they have net income just like we did in our company, right? They put in income taxes, which we didn't. But, and notice these are in millions. So be careful when you're looking at a big company, like one of the public companies, you need to take a look. This is not 18,000, this is 18 billion, right? Because it's 18,000 million. So, so that's an income statement for Kohl's. And let's look at Kohl's balance sheet. All right, I'm sorry, there's a lot of big numbers here, a lot of small numbers here, but again, it's the same thing. Notice that we have 14555 here, and then down at the bottom, you have 14555 again, right? So the balance sheet balances just like it did before. Total assets gives you total liabilities, and shareholders' equity, which is a little different here. This is a corporation, so we call that shareholders' equity or stockholders' equity. And this is a little more complicated, obviously, than the one we looked at, but the concept is the same. And if you study accounting for a year or two, you're going to know everything that's on this balance sheet. It's going to be very familiar to you. Why might you need to know that? Well, maybe you want to invest in Kohl's, or maybe you want to go work for them. Maybe you're working for a bank and you have to decide whether or not you want to lend them money. All right. And there's a bunch of other decisions you might want to make. So understanding a company's financial statements is a very, very valuable thing to be able to do. All right. And that's one of the things that you learn in accounting, how to see how well companies are doing. All right. So as promised, I want to just mention a few accounting careers. So if you have a degree in accounting, you can become a certified public accountant. You might go work for different companies. So you could work for a big company, big certified public accounting firm, or you could work for a medium-sized one or a small one. And no matter what, certified public accountants or accounting firms go out to different companies and they help them with their finances. They perform all kinds of different services. But the idea is that you don't work for one company, you work for an accounting firm, and the accounting firm goes out and visits all different companies to help advise them. You can be a company accountant. So for example, maybe you work for Kohl's within the headquarters and you help them put together all of those numbers that we looked at today. That would be a company accountant. You might be an auditor. So an auditor is an outside person who may work for a public accounting firm, who probably works for a public accounting firm, but the auditor goes in and checks all of Kohl's numbers. So those numbers that you saw, those were from a report to the SEC, the Securities and Exchange Commission. That report has been audited. They can't just put out numbers and say, here, these are our numbers. Somebody goes in and they check the numbers, and that's what the auditor does. A tax accountant, a lot of times people think, well, if you're an accountant, you do taxes, but not everybody does, because you might have one of those other jobs and you might have very little to do with taxes. A tax accountant might work within a company, they might work within a public accounting firm, and they're dealing just with taxes. You can have your own small accounting firm and you might do taxes for small businesses and for individuals. Finally, financial analyst, you might be doing analysis work, and there's all kinds of different places you might be doing that. So those are just a few of the jobs that you can do with a degree in accounting. Within each one, there's a lot of different nuances depending on the size of the company you work for. And, you know, that just to give you an idea of the kinds of things that you might do. If you're interested, you can always go do some more reading about those positions. Okay, so today we talked about what is accounting. We looked at starting a business and we saw, well, you know, how it works, what kinds of things you have to think about, and then, you know, what accounting does, how it helps you to see how well your business is doing. And finally, we took a little look at accounting careers. So I hope this helped you a little bit understand what accounting is and what it isn't. If you enjoyed my video, please subscribe to my channel. I would appreciate that. And I'll see you next time. Have a great day.